Theresa, thank you very much for being here.
Delighted.
And WSIB has obviously been such an important part of FCLT since the very beginning. No surprise given the long-term focus of your organization. Can you talk a little bit about why long-termism is so important for the broader economy and society?
Sure. Well, first of all, a long investing horizon gives you better returns over time. Those who have a short-term focus typically do not do as well as those who have a long-term focus and have longer holding periods in their investments. But also, if you move out your time horizon, your investing time horizon, you also are able to think more broadly about things that are important to society. ESG factors, environmental factors, social factors, governance factors, those are all really important to our stakeholders. And if you're totally focused on the short term, you aren't necessarily going to look at those things that could harm your business over time. But the whole concept of a license to operate is really important in the world right now. Corporations are expected to behave in a certain way that not only produces returns for us as shareholders, but also produces returns for society. So with a long-term time horizon, you can actually incorporate those kinds of factors into your analysis of what's a good investment. So that essentially aligns both our shareholder responsibility and our responsibility to society.
So when you say it that way, it all seems so logical.
Yeah,
so
it
what
does.
So what is preventing our public markets from being more long term?
Well, there's still a lot of pressure from Wall Street and for people who have a trader mentality versus a buy and hold mentality. Traders are evaluated on their short-term performance, and I think institutional investors, at least from my perspective, provide some ballast to the capital markets because we are there, in and out over many market cycles, but we're not necessarily the majority of shareholders. So there is still a lot of pressure on public market companies to perform in the short run because that's how traders get incentivized and compensated.
Well, in the spirit of incentives, what are some of the incentives or the tools or the approaches that might start to nudge things in a slightly more long-term direction than they are today?
Sure, and there's been a lot of discussion today about some of them. I think, one of the things that's really occurred to me in the discussions today is that it's not nearly as much about product or mechanisms or even market mechanisms. It really is about culture, and it's about commitment. So it means the corporations need to commit to a long-term view. Shareholders need to support them and frankly give them cover during times of market pressure or underperformance. For instance, if you're a CEO and you want to make a significant capital expenditure to begin a new line of business, or if you're a pharmaceutical company and you want to commit more to research and development, or you're a manufacturing company and you want to build new plants, there is a cost to that, and that will potentially create short-term underperformance from your peers who are not making those same kind of capital allocation decisions. Us as institutional investors, our obligation, I think, is to provide cover to those companies during that period of time if we believe in their strategy. So it's, at least from my perspective, it's much more about dialogue between the company and the investors and aligning on strategy and understanding strategy. That's way more important than a market mechanism.
And as you're working on those relationships and evolving them as they go, what are some of the roadblocks or the kind of bumps in the road that you find most often will influence or impact your ability or a company's ability to really deliver in the long term?
Well, some of the problem is we have the wrong people talking to each other, and we've had some conversations through focusing capital on the long term through these forums that you pulled together, where oftentimes it's an analyst talking to maybe an investor relations person or a CFA, a chief financial officer on a quarterly call where you're really not talking strategy, you're just talking quarterly performance. The conversation has to elevate to CEO to institutional investor, CEO or CIO level. We have to have more of those conversations, and it has to be a strategic conversation rather than just a quarterly performance conversation. You also think about the governance profession, which has really taken off over, in terms of corporate governance, taken off over the last decade. oftentimes corporate governance staff are more legalistically oriented, and they're talking again to the corporate governance staff or the corporate secretary of the company. And those become sort of rule-based dialogue, and they're check-the-box exercises in terms of, you know, whether you have the right corporate governance. Again, they're not strategy discussions. So I think we absolutely have to figure out some kind of forum for strategy discussions between investors and corporations.
Hopefully FCLT can be a small part of that.
A huge part of it. You've already started the
Huge
dialogue.
would be better.
Yeah.
Last question. What you know, you've obviously been part of a lot of these conversations and with a lot of different companies. What is the advice that you would give to a manager or an executive who really wants to chart a long-term course for their organization?
Well, I think first of all, have the courage to do it, and recognize that it really does. It is becoming an increasing expectation, not just of investors, but from society. As you know, capitalism is under incredible pressure. With digital media and social media, any issue that in the past may have taken, you know, a year to build now is the amplification effect of digital media means that an issue that was maybe could be ignored by a company before absolutely can't be. Right. And the pressure comes into my boardroom as an investor, it goes into the corporate boardroom. So I think there just has to be an awareness that society expects the corporation to provide good things for society as well as good things for me as a shareholder. And my own beneficiaries, especially the younger generation, the millennials, they expect us in our investing behavior to support those companies that are doing good things for the long term. So I think a lot of it is just have an awareness and be willing to engage in that kind of thinking and that kind of conversation.
Well, thank you.
Thank you.
Wonderful note on which to end, and thank you so much for all you do for FCLT.